Hey, it's Mike Cambright with FlipNerd.com. Welcome back for another exciting VIP interview where I interview some of the most successful real estate investing experts and entrepreneurs in the industry to help you learn and grow. Today, I'm joined by Cris Chico, who's a successful real estate investor who specializes in virtual wholesaling, which allows him to invest in many other markets across the country and not be bound by only investing where he lives. So today, he's actually going to walk us through his entire process of how this works from lead generation all the way through to purchase of a sale. So it's going to be a little bit of a lesson here. Cris is a great guy, and we're excited to get started here. But before we do, let's take a moment to recognize our featured sponsors. RealtyMogul.com is an online marketplace for real estate investing, connecting borrowers and capital from accredited and institutional investors. Get a rehab loan fast and close in as little as 10 days. Rates start as low as 9%. We'd also like to thank National Real Estate Insurance Group, the nation's leading provider of insurance to the residential real estate investor market. From individual properties to large-scale investors, National Real Estate Insurance Group is ready to serve you. Please note, the views and opinions expressed by the individuals in this program do not necessarily reflect those of FlipNerd.com or any of its partners, advertisers, or affiliates. Please consult professionals before making any investment or tax decisions, as real estate investing can be risky. Hey, Cris, welcome to the show.
Hey, thanks for having me on.
Yeah, glad you're here. So, for those that don't know, we actually just met in person last week at an event and got to talk briefly. So, I'm glad we get a chance to talk a little bit more here today.
Yes, and it's interesting because you and I had gone back and forth on email, and I just got stuck on the name. And when I saw you, it was like I didn't want to call you the Flip Nerd because I thought it was maybe kind of odd, but it was great. It's always great to be able to meet in person because, so many times we just speak over the phone and over Skype, etc.
Absolutely. So you've got a great system in place from everything I know about it. I'm excited to learn more about it today. Before we get started, why don't you kind of introduce yourself to those that don't know you and tell us a little bit about how long you've been investing and how you got started and kind of how you got to where you are today.
Yeah, and I'll make this my introductions are really sweet and to the point, so that way we can get into the meat of what we're here to talk about. But I start off as an accountant, right? So I have a degree in accounting, which I can't even balance my checkbook properly. So, but I start off as an accountant, and then I went to work as a real estate agent. And then what happened is that I through a contact as a real estate agent, I had someone that was a friend of mine that was involved in the REO market, right? And so he was in charge statewide for Arvida Realty at the time here in Florida. And he got me on board in helping the banks dispose of their properties. And that's really where I got my start in understanding and understanding the business of real estate investing versus the residential real estate stuff.
Right.
And I did that for a couple of years. I got a lot of experience. And then I saw that the market was shifting, that the banks were getting less inventory. And what happened is actually one of my investors that was buying most of my deals as an REO agent, he asked me and said, hey, would you want to come work for me and help me on this side of the business? And so I took the leap of faith, which was, you always think about in life, your pivotal moments of decision that you make, and you could go one way or the other.
Right.
And that's certainly one of them where I went to work for him. And I worked for him for a year only. And it's funny because I went in with the intention of only working a year and then trying to do it on my own. And the benefit that I had is that for a year, I had someone right there by my side that I could go to every single day and say, what about this deal? What about that deal? What about this deal? And I helped him buy about 50 properties that year just for me. He had a couple other people involved. And, to buy 50 deals, he got to look at a lot of deals. So it gave me a really great education, very much compressed. So
Right.
I got experience of what somebody else would have taken maybe 2 or 3 years.
Sure.
And then what happened is I saw that's when I saw that the banks were not getting as many REOs. And I thought, man, I got to go after private sellers. I got to figure out a way to target people that are not in they're not banks for sellers. And then that's what the journey started. Just like every other investor, I went in and I bought courses and I tried a bunch of different things, and I couldn't get really anything to kind of work. And then as I went to seminars, I noticed that a lot of the successful real estate investors were doing direct mail in order to generate leads. And I saw that as a common theme. And I made the decision that I think that's really important for real estate investors is that what's the one thing that I can focus on? Can I focus on one thing, give it my all, and then try to make that work versus spread out among 4 or 5 different or more things just because I'm trying to hedge my bets. And what happened is I decided to go and do direct mail and really learn it and understand it and really try to become good at it. And that was my saving grace, because I literally went from making a couple $1,000s a month to then when I really focused on it and really got it dialed in, 6 months later, I made the most money I've ever made in a year. And in a month, I made I think it was like $110,000 in cash in my pocket. And that was just really from direct mail. And so as I was doing direct mail, I was doing it in South Florida. However, I noticed that the market was softening a little bit here in Florida.
So what year? What year was this, Chris? When you started? When you kind of went out on your own? How far back was that?
2005, 2006.
Okay, so the market was still about to turn in a couple of years. So, okay.
Yeah, but then so as the market, I saw that other people were doing deals in other markets out of my localized area. And yet they were not struggling as much as we were, and so we saw our cost per acquisition continually increase in our market. And so that's what prompted my idea. Well, gee, can I just take the same thing I'm doing here and do it somewhere else? And so, the sellers were easy because I knew how to get the list and how to do the direct mail for sellers. And we'll get into all the mechanics of how that works. Yeah. But, but the key thing was the buyers. How do I find the buyers? And I figured out hey, let's target the people that recently purchased a property in that area. And so kind of through some trial and error combined it. And then now I was able to not only do deals here in South Florida, but I started to do deals in Jacksonville. I started to do deals in Texas, and then started to do deals in a bunch of different states. And, that was great because as the market kind of deteriorated here, it allowed me to still continue to do deals in other markets that were maybe not as affected, by the housing bust.
Right.
And then now, it's pretty much what I do. One of the great things about what I do is that there's so many things that in real estate investing that change. So many different strategies. There's Facebook now and there's Google. And what I find interesting is that, yes, there is a lot of technology out there for us to be able to use as a real estate investor. Google Street View as an example. I used to have to go and find somebody to take a photo of a property. Right. Now we can look at our computer. But it's interesting the fact that I still do my deals by sending out little yellow postcards and white postcards that were the same back in 2005.
Yeah.
And so there's something to be said where, you could still I'm still doing fundamentally the same thing I was doing back then. I'm still doing it now.
Right.
And that's pretty much what I do. I do that for myself. We do have clients that we do that for, and I'll explain and how the whole system works in a nutshell.
Sure.
But that's pretty much kind of like the gist of my story. I'm trying to condense it and give you a shorter version of it.
What I was telling you before, what's interesting to me is my model has always been to just stay in my market. And in a lot of ways through the interviews we do on Flip Nerd, I've met people that are investing in lots of different markets, and up until recently that was so alien to me. But I've always been I want to be able to see my houses. I want to go approve the deals, which by nature limits you because you only have so much time in a day, and it's hard to systematize if you're the bottleneck on everything. And so it's fascinating.
Well, what I want to do is, and you tell me, is that I could kind of in an overview, explain how we do everything,
Absolutely.
how we generate leads, and some of the stuff that we do, and maybe as I go along, maybe you can ask questions, and so I'll try to give you the cliff notes, and then maybe as we go along, if you want more info about something.
That sounds great. I think a lot of people watching this will appreciate that.
So one of the things that for us, our base is direct mail, right? So because of lists, because of technology, we can really go into almost any market and get a list of sellers, right? Mm-hmm. And so typically what we do is we target, in any particular area, we target absentee owners, right, for sellers. That's our primary bread and butter. So absentee owner would be a landlord. And on the flip side, that's for sellers. And then for buyers, what we do is that we target absentee owners that recently purchased a property. So as an example, when we target for sellers that we want to purchase their property, typically we target properties where the owner has owned the property for 10 years or longer, right? And so therefore, the more they've been in the property, the better chance we have of something going wrong, and now they want to get rid of it.
Right.
Whereas on the buyer side, we focus on recent investor sales. So we focus on people that purchased a property as an absentee owner in the last 6 to 8 months or sooner. and we gather up those people, and then we market to them. So we are attacking both ends of the list. On one side, we got the older guys that have bought a long time ago. On the other side, we have the ones that have recently purchased. And our objective is to find a match really from one list to the other, that then we can kind of play matchmaker and do that deal.
Sure.
In concert, right?
Sure.
So predominantly we do direct mail. And so if you look at us going into a brand new market, let's say a market that I've never been in, for example, let's say Dallas. You're in Dallas. We recently did a deal.
Don't come here.
No, well, it's too good of a market. So,
I'm joking.
No, I want to give you a tip about how we got that deal in Dallas, and I'll get to that in a second. But in Dallas, for example, Dallas is a huge market, right? A lot of zip codes. And so anybody coming in, you might say, well, gee, how do you go into a market like Dallas, and how do you target that market and know where to go in and where to be out? So what we do is that in a market like Dallas, I'll go in and I'll pull the buyers list. And I want to know the buyers, say between 6 to 8 months ago. I want to know all the investor buyers that have purchased property in the last 6 to 8 months. And I'll download that data. And I do a bit of an analysis, right? So I want to know in every zip code how many number of sales we had in that particular zip code as an investor, right? So in other words, if we have a zip code that had only 2 investor sales over the last 6 months, that may not be a zip code that I might target initially, right? Because there's not that much activity.
And when you say investors, how are you defining that? Is that cash transactions?
We're not looking at cash. We're just looking at it as an absentee owner, because if we don't want to limit it to because in that mix, we're going to find landlords that may have purchased a property as an investment, but maybe got conventional financing, which we're okay with, but we just care that they're investors actively purchasing in that market.
Okay.
Right. So we look at the number of sales in each zip code. One of the things that we do is that in your market, for example, Dallas, there's a lot of hedge fund activity, right? Yep. So one of the things we do is before we analyze the list is we remove all the hedge fund activity. So we go in and we see, hey, this particular hedge fund bought 150 properties. We actually delete those from our list. And the reason we do that is we want to normalize the data. Typically, when a fund buys properties, they're usually buying within a very specific criteria, very specific criteria, sometimes in an area with regards to when the homes were built, right? Okay. And so they're not our typical buyer. They're not really the buyer that we normally work with. And so we don't want to make a decision about a zip code that might have a lot of hedge fund activity, and we perceive it to be a good zip code for us. But when we remove that activity, we realize that it's not as good as we thought it was going to be. Okay. Right? Make sense?
Yeah.
Okay. So then the other data points that we look at is we'll look at, say, the zip code, the list of buyers that we downloaded. We'll look at the frequency of transactions in each zip code. We'll look at the average assessed value. In your market, it's a non-disclosure state, so we can't look at average sales price. So we'll look at average assessed value. In other markets, we'll look at average price, right? So we want to know. So we look at average price. We also look at average year built, right, as far as the properties are concerned. Okay. And so what we're trying to do is whenever we're going into a market and doing a mailing, especially when we don't know anything about the market, we want to get like a sampling. We don't want to mail a bunch of properties, a bunch of zip codes at where the properties are selling 25 or 30,000, and we don't want to mail also on the high end too. So we want to get like a variety of different zip codes. Therefore, we get a sampling. We're targeting areas where maybe the price point's really low. We're targeting a few areas where the price point is higher, so that what we're looking to do when we do a first mailing into a market, we're looking at doing deals, but more importantly, we're looking at acquiring data. Yeah, we're looking at acquiring data so then we could make adjustments on subsequent mailings and then really fine tune. Because in our market, like for example, Miami, we've been in Miami for a long time, and Miami has a lot of zip codes, probably about 35 or so zip codes. But over time, we figured out that we do deals in only 10 of those zip codes. Okay. And no matter how much we've mailed in certain zip codes, we've never done a deal before. And so there's a way. So our objective is to really figure out where is that 20%? Where's the 20% of those zip codes that's going to give us 80% of the results, and then we can eliminate the rest. Right. Does that make sense?
Yeah. Now, okay. What typically drives that there are some zip codes that you just, Is it because they're higher? They typically are higher end and they're not as responsive to your pieces, or what do you think drives that?
Every market is different. So as an example, let's say I might see a zip code in Dallas that has a really high number of investor sales. And however, it may be that those investor sales are driven by HUD, right? So maybe they're buying a lot of HUD home properties. And so it might be difficult for us to do a deal there because we have to buy the property at such a much lower price because HUD is in there and we're competing against HUD with regards to the inventory that we offer the other investors.
Right.
And so that example, that zip code may end up not being a good zip code because of that.
Okay.
So it's a combination of factors. Many times it has to do with the neighborhood demographics. There's a market, for example, that we're trying to work on recently where we picked up some deals and we thought they were good deals, but now as we talk to investors, we realize that that area is not really an area that a lot of investors like to buy properties in.
Right.
Or if they do, they need a really, really huge discount, right? And so we might make an adjustment of either, hey, we know we need to buy lower at that zip code, or we may extract that from our list and just say, you know what, let's focus on these other ones that potentially are better. We have a better chance of doing deals.
Right.
And then finally, the other thing would be price points. When we look at our average assignment fee, because most of all of these deals we're assigning, we might have a couple of zip codes where we can buy deals at say $10,000 or $15,000, but on the upside, we could only make $2,000 or $3,000 each versus other zip codes we have a chance of making $15,000 or $16,000. So we might push our marketing more toward those zip codes. Okay. So going back to your question, there's not a set answer. It's more like really just analyzing the data and trying to make some assumptions and trying to, because every market is different.
Right. Okay.
So now, let's say I decide, I'll use your example. I decided I'm going to go into Dallas, Texas, and I'm going to go ahead and do marketing. So let's say I do my research and I figure out I have these 10 group of zip codes that I'm going to go ahead and mail to. So typically what we do is our main marketing method is by postcards. We use 4x6 postcards. They're usually in yellow or white. The yellow or white is dependent on the message, right? And to mail those cards, we use a service called Click-to-Mail, right? And click2mail.com, and we use that service to create and mail the cards. To acquire the list, for sellers, we use either listsource.com or another option is realquest.com.
Yeah.
They're all owned by the same company, and that's where we get the list. The mechanism that we use for these people to respond back to us, and I'll go into detail on these, is we use a 24-hour recorded message, and there's particular reasons why we do the 24-hour recorded message. And generally, we use what I call blind copy on those cards. All right, so let me cover the 800 number and the blind copy. Actually, let me cover the blind copy first. So I publish a course that shows people how to do what we do. And in our market, there's a lot of competition. And so I was thinking, how can I go about in differentiating myself from other people that are mailing in the same area? And if you look at what most people get as a message, the message says we buy houses in some variation.
Right.
And as much as I try to be creative, there's only so many ways I can say that, right? And so I thought to myself, well, gee, if you imagine a seller sitting on their kitchen table with 10 cards and they all say we buy houses, how can I get my card to go to that next step? And the next step is not for them to decide to sell the house to me, but rather the next step is for them to pick up the card at least. And now I'm in front of them and everybody else is on the table, right? Does that make sense?
Sure.
So I thought, well, my thought was instead of transitioning the workhorse from being the postcard to being the 24-hour recorded message. So in a typical postcard, the postcard says, we buy houses cash, call us, we'll take care of your tenants and so on. So the card is is attempting to convince the person right then and there with the card to go ahead and make the decision that, yeah, I like what this guy says. Let me call him and see if I can get an offer. All on that one card. What I wanted to do is, how can I take and transition I wanted to minimize the decision. So if you look at that card that says we buy houses, the seller has to make quite a bit of decision points. They have to, I want to sell my house. I want to go with this guy. I like what he has to say. So really what I want is, all I want is for them to pick up the card. That's all I want them to do.
Okay.
So instead, what we do is our cards don't say anything about us wanting to buy their card. Our card in general says, hey, Mike, urgent notice about your property at 123 Main Street. It's important that you call this 24-hour recorded message so that you can hear the message about your property.
All right.
So when we do that, all of a sudden, our average response rate nationwide is about 8 to 10%. So 8 to 10% of the people, which is a very high number, will pick up that card because they're just curious. They want to know, what is this notice about? But now the moment they pick up that card, we are now one step a little closer, right, than the rest of the people that are on the kitchen table, because now they picked up our card. Now they call the 800 number. And now the 800 number now is the workhorse. That is what's going to try to convince them to say, I like what these guys have to hear. Let me go ahead and leave a message so that then that way I can go ahead and get an offer.
Yeah.
So what I've done is I've transitioned the work from the postcard to the actual voicemail message, because I'm just trying to get them to make incremental decisions. I don't want them to make a decision about them selling their house. I want them to make a decision about picking up the card. When they call the number, I want them to make a decision about leaving a message. And then, so that way I could just little by little bring them along.
Yeah.
And what that does is enables us to gather more leads from a couple of different perspectives. Now, we use the 24-hour recorded message because if we send out any sort of large amount of mailings, there's no way that you can handle those calls on the fly going to your direct phone. I don't care how many staff you have. We'll do a mailing, and in the course of an hour, we'll have 100 people simultaneously call within the hour. All of them call the number. There's no way that could be handled. And so what we do is we get them to come in through the 800 number, and then a certain percentage of those will leave a message. A certain percentage of those will hang up. What happens is that the ones that leave a message, obviously, we follow up with. The ones that hang up, we actually will call back all the hang-ups and say, hey, this is Chris. I don't do it. We have a VA that does it. We'll say, hey, this is Chris, or this is whoever the person is. Dana is the person that we have. So, hey, this is Dana. We just missed your call. We sent you the little postcard about your house for sale. You listened to the message. Were you interested in selling the property? And what we'll do is we'll actually get more leads from that.
Sure.
Because now, it's a targeted list we're sending to. So what we're trying to do is we're trying to just increase our net.
Right.
And we're trying to move them away from everybody else on the kitchen table and onto our side. So we have a chance of trying to convert them, because in the end, I don't want to convince them through marketing that they want to sell their house. I want my salesperson, my acquisitions manager, to be the person that does that.
Right.
Because that's going to give me a better chance of trying to get that deal versus just a phone message or just a postcard.
Yeah. So you're saying you get about an 8 to 10%. That's the number of calls you get, kind of pieces to converted to a call, whether they hang up or not, and then there's some fallout there.
Yes, exactly.
Kind of following your funnel here. So then, what percentage of people would you say actually leave a message?
It depends on the market, but in general, we're talking about 30% or so.
Okay.
And that's reasonable because it's such a wide net. Now, as an added tip, I want to talk about the buyers on that, on the card. So let's say we send out the postcard, calls come in. What happens is people leave a message. The minute that leaves a message, that message gets routed into our CRM. We're using Podio for our CRM. It gets dropped in there. And now we have a new lead. Now we have a 3-person team. Now I'm not the one that personally speaks with the sellers. So we have a 3-person team that encompasses 2 VAs and an acquisitions manager. And so with that 3-person team, we can handle about 2 to 3 markets, depending on the mail volume. So we have we have a tier 1 VA and a tier 2 VA. A tier 1 VA is the one that will listen to the message, will transcribe the message. If the seller leaves all the information about the property, they will pull the property information, they will pull the RealQuest reports, they will pull all the information, populate the record. If the seller does not leave enough information, they will call the seller back and go through a questionnaire. Even if the seller does leave all their info, they will still call the seller back and go through a questionnaire regarding price, tenants, condition of the property, and even including asking the question, if we were to pay you all cash and close quickly, what's the best that you can do? Now, once they're done with that, it gets moved to a Tier 2 VA. Now, Tier 2 VA, and these VAs are all located in the Philippines. The Tier 2 VA is the one that interacts directly with my acquisitions person.
Okay.
And between my acquisitions, the Tier 2 VA is the one that actually will call the sellers and make that initial offer onto the property. They're guided by the acquisitions manager based on certain formulas that we have on every market as regards to offers and how we make offers, etc. And then what will happen is that then, they'll make the initial offer, and then at some point, the acquisition manager will step in. Sometimes the VA will be able to make that offer and get accepted. Other times there may be some back and forth, and the acquisitions manager may step in and say, hey, this is Steve. You spoke with Gil, and you know what? We love the deal. We'd like to try to work something out, and then we'll try to get the deal done. Right? So
your acquisitions manager, I guess with your Tier 2 VA, if you're saying typically they would call and make an offer?
Yeah, the Tier 2 VA will most of the time make that offer.
And that came from kind of analysis from your acquisitions manager who is looking at comps and looking at the information based on property condition and coming up with what their offer would be?
Yes, exactly.
Okay.
Exactly. And so then now, so if the seller agrees on price, then we will send them a contract. Now, the contract we send we ask if they have an email address or fax. If they don't, we'll send it priority mail. What we do is we have a contract template that we have in Google Drive that they will copy, and then they will populate with the appropriate fields for that seller deal. They will convert that into a PDF, and they will send the PDF by fax or email. Or if they want it by mail, then we upload the PDF to Click-to-Mail and send that off priority mail through Click-to-Mail. So all the offers are all done by the VA. We have the signatures already, signature image already on all the documents, so we never really print or signed anything by hand, and everything is sent out to the client that way. Now, that's what we call an agreed upon offer. We also have what we call a pre-sale offer. A pre-sale offer is where we're at an impasse. We are not able to really come together on price and terms with the seller, but however, we want to get something in front of them. And I use an example of a deal we just did in Dallas. We just did a deal in Dallas, this is about 3 weeks ago, where we wholesaled the property and we made $16,000 on the wholesale fee. For Dallas and the neighborhood we're working with, that's a pretty good fee. So what happened with that deal is that the seller wanted $60,000 and our offer to them was $45,000. And we couldn't come together on price and terms. So what we did is we actually sent them what we call a pre-sale package, which is a package of about 4 or 5 pages, includes a nice written letter, some other paperwork to try to convince them and sell them that, hey, we're the right guys for you to sell us the property to. And it included a contract. In this case, included a contract for $45,000. So we send that off. So our objective is either we get an agreed upon price, or if it's close, then we'll send a pre-sale. We sent that pre-sale. About 45 days later, the seller calls us back and says, hey, my tenant moved out, and now I want to sell this. And I have all these cards and letters from everybody else, but you're the only one who sent me a contract. I would like to sell the house, and I want to sell it now. So all of a sudden now, we go back to the idea of the kitchen table and our postcard. The same analogy applies here. We put a contract in front of them, whereas everybody else just sent them letters and postcards. When they were ready to take action, they called us.
Right.
Obviously, we renegotiated. We ended up getting the deal for $40,000, sold it for $16,000. So we made $16,000 on a deal where potentially, if we hadn't sent that contract, we wouldn't be in that position.
Right.
That doesn't preclude us. We still, even though we send that agreement, we're still following up with them over the phone. We're still being aggressive in our follow-up. But it's just one other thing to try to get us a little bit closer than anybody else.
Yep.
And so then now, so let's say at this process, we go through this process, we get a deal. And then at this point, then our objective is to go out and sell the property. So to sell the property.
Hey, Chris, let me ask you first on the acquisition side. So given that you can't see the property, you're relying upon what the seller told you in terms of the condition of the house, maybe making some assumptions based on square footage, like, hey, we know we're going to have to paint it, so it's going to be this much per square foot. You're coming up with a repair estimate, right?
Well, no, typically we're not. It depends on the property. So sometimes we do need interior photos. Let's say that if a property's been vacant and it's been vacant for a while, we usually want interior photos because nobody's been living in there, so we need something to get a better feel for things. And so in that instance, we use a service called wegolook.com.
Yeah.
And you pay $59 and you'll get somebody to go out and take photos. They do a real good job. Typically, they get somebody that's in the industry. So like, for example, they do that for a bunch of different stuff. But as an example, most of the time when we get something done for a house, it's usually a real estate appraiser that goes out there that's just looking to make extra money. Yeah. So they really give you, it's not just photos, they give you a good description about the property and any potential issues that they may see.
And you do that, so you do this after you get it under contract?
Yeah, we never do anything until we get a contract signed.
Okay. And then I assume you're putting some sort of termination agreement or something in place to where if you overpaid and or you have a hard time selling it, you have a way to
Yeah, typically we put on the contract that we have a 15 business days to inspect the property, and then we can decide if we want to go forward or not. So 15 business days really equate to about 3 weeks.
Yeah.
And so that's our clause in there. Going back to your question, initially though, how do we make a determination about these properties? Typically, if a property has a tenant inside, then our offer is really based on ROI. And we use a gross ROI to make things simpler. So as an example, in a particular market we're in right now, typically we're having to make offers at about 30% ROI. And it's just cash on cash. We don't calculate any of the expenses. We just say, you know what, if we could buy that deal, if the deal is getting $1,000 a month, and we multiply that by 12, and we divide it by 0.30, we get what it would be if somebody bought that house, paid cash, what would be that return on investment, just gross. And so the way we make the offers is we say, well, gee, if we in that market, we know that if we buy a house at 30% ROI, we can then sell it at maybe 25 to 26% ROI. So that 4% ROI spread may account, depending on the price point, could be account to $5,000 or $6,000 to as much as $10,000 or $15,000, depending on the spread.
Okay.
Does that make sense?
Yeah.
Okay. So that's how we're making most of our offers. Our objective is, it's more of a numbers game, right? So we're not looking to buy and fix up the property or close on the deal. We're not putting up any money for deposits or down payment. So our objective is really, it's a numbers game. We'll put 10 properties on the contract. Through 2, we'll probably figure out that, hey, it's too much money. We may go back for a price reduction, but in the end, we may let it go. Another couple may end up falling through because of other reasons, and in the end, we'll end up with a net 4 deals that we'll do, and we'll make money from those.
Okay.
And so it's really more of a numbers game because it's more of a low-hanging fruit approach, versus approach that maybe you might have because you really have to put your money down and close on the property,
right,
and make that investment. Whereas with us, we don't really have that risk that we're looking to take.
Right.
So then now let's say we have a property on a contract and now we're looking to go ahead and sell it. So our primary method of selling that property or finding buyers is through direct mail and through Craigslist typically. And so, and if you see me writing down, it's just, I got to write things down. So as I'm telling you these things, I'm making notes to myself to make sure I tell you about a couple things.
I'm taking a lot of notes. This is the most notes I've ever taken in an interview, I think so.
So direct mail. The same approach that works with sellers on the blind copy approach works extremely well for buyers. When I started, I used to do the postcard, sending it to buyers that had recently purchased a property in the last 3 to 6 months, and I would have a URL on the card for them to visit my website. And that was back early 2006, 2007. Not a lot of people were using websites. Now that's more prominent. And so our objective is really the same thing as the sellers. We use a blind copy approach. Hey, Mike, urgent notice about your property at 123 Main Street. Call this number. When you call the number, it says, hey, Mike, the reason I sent you the card is because I noticed you bought a property at 123 Main Street. I have another property below market value near that one, and I'd love to tell you about this property. It may not fit for you. If it doesn't fit what you're looking for, Perhaps I might have others. And so then their objective is for us to get them to leave a voicemail message. And then what happens is they leave a voicemail message. If they leave a voicemail message, that gets routed into Podio. And then the VA will go ahead and will call the investor. If the investor leaves an email address, then they'll process the lead right within Podio. We have some integration with a tool called Zapier, which then takes that prospect and pushes them out to MailChimp, which is our email platform. And they automatically then will get an email saying, hey, thanks for leaving a message. Here's our information to our deals. And all that will happen automatically. If they don't leave if they don't leave their information, the VA will call them back. We'll get all their information, gather their information, and then we'll do the same thing, process the lead, and click on, it's a one-click thing that we devised in Podio where they click on that one button, and then all the info gets sent over to MailChimp, puts them on our list, gets them the property, and then our acquisitions manager gets notified because he kind of works both angles. Because because he's working with two VAs, he doesn't have to talk to every seller, so he's able to handle both the selling and the buying aspect simultaneously.
Okay.
Now, same as direct mail, but even better, the list that we send to when we target buyers like that is relatively a small list. We'll pick the zip code that the property is located, and we'll do a circumference around that zip code. Right. So maybe, depending on the market, that may be 300 or 400 names. But we know they bought a property recently. So what we'll do is we'll do the same thing. People will call into the hotline. Some will leave a message. The ones that don't leave a message, we'll call them back and say, hey, I sent you the card, et cetera, and then we'll scoop up additional buyers. And those are pretty good people to talk to because, again, we know that we purchased a property recently. And so, therefore, we're able to take a mailer that would maybe potentially give you a 5 or 6% response rate. We'll get 30 to 40% response rate on just the calls coming in, and then we'll get a lot more buyers into the mix.
Yeah, that's great.
With that concept. And I split tested that. The reason I came about is because I was doing the website, and I was like, I'm not getting any buyers. And I said, in the past, when it was a hot market, you could gather a list of 1,000 buyers, and it was just a numbers game. Yeah. Now it's more a relationship. You don't need 100 buyers. If you had 15 or 20, and that's even a lot. If you had 10 real solid buyers in your market, that's all you need. Right. You can get rid of all your product. Right. And so our objective is really to talk to them, get them to leave a message. And we just want to build that small list of buyers that we can go to and sell these deals to, not a 2,000 list of people that we have no idea what they're about.
Right.
Now, in addition to that, we will go into Craigslist. We'll post ads on Craigslist to try to get people to respond, and then for us to try to engage them and put them on our buyers list. If we're in the market brand new, we go into Craigslist specifically looking for other wholesalers, looking for people that are selling handyman properties, investment properties, and communicating with them, finding out what they would do if we had a property for sale, and getting some input. So in the beginning, when we're going into a market, it's very likely that we'll sell most of our deals through another wholesaler and through someone else. Simply because we don't know the market, we're looking to get input on these deals, we're looking to get distribution, and we may not have that distribution right now. And as we progress in that market, as we slowly build a list, then our dependency on other wholesalers begins to diminish, so that then because we build up our own buyers list.
Right.
All right. And then, we put the property on the contract, and when we put a property in the contract, we will mostly agree with whatever the seller says. If the seller says, hey, I want the tenant to stay in there, let me make a comment here. We want the seller to stay. We want the tenant to stay in there. We'll say, fine, no problem. You can leave the tenant in there, because in the end, it's really not our decision. The decision is with the buyer that we sell the property to.
Right.
So we agree as best we can. We're not going to agree to unreasonable things, right? Because we know what a buyer may or may not want based on our experience and our ability, just our past experience. But then now, when we find a buyer, and the buyer says, you know what, the tenant's in there, but I want them out. And if he's the only buyer we have, then we'll go back to the seller and say, hey, we need to make some changes in the agreement and the deal structure in order to be able to get us to closing. And one really good advice that I can give everybody is that anybody who calls a seller never takes the position of being the actual investor. So as an example, when Steve calls and anybody calls, we don't call as, hey, I am Cris Chico. I'm a real estate investor. I'm going to write a check and buy your house. Right. It's always, I'm calling on behalf of whatever the company is. And so what that allows us is allows us to better interact with the client, because it allows us to deflect the blame.
Right.
Mr. Seller, it's not me that's making the offer, it's the company. This is what the company is it can pay for the property, because we're really paying around assessed value. However, let me see what I can do. Tell me the best price you can do. Let me go back to them and let me see if I can get that approved. I can't guarantee anything, but let me see.
Yep.
So it allows us to really have an easier time in interacting with the client and really aligning ourselves on kind of transitioning from being across the table to being on the same side of the table.
Right.
When we're dealing with them.
Right.
And so when we go back for price reductions, changes in the contract terms and conditions, it's, you know what, I know we agreed upon this. However, our funding source, and that's how we always explain it, our funding source came back and says they'll approve the deal, but we have to make some changes. It's not my fault, but I'm here to try to help you, to try to see if we can make this work so that in the end you get what you want, which is a property sold and closed.
Yep.
And sometimes that may be a price reduction. They approved the deal, but they approved it at a lesser price. And here's the lesser price, and here's the reasons why. And can you help me with this? I might be able to, so that's the other how we interface with the sellers,
right,
to help us. And then the rest of it, once we have a buyer and a seller put together, then it's just a matter of pushing the transaction through and dealing with all the. I always say that the fun never really begins. The hard work never really begins until you actually sell the property. Most people believe that, I'm going to get a deal, I'm going to get a buyer, I'm going to sell it, and I'm going to just, jump up and down. That's half the work. You and I both know that from that moment on, there's a myriad of things that could happen on that transaction to have the whole thing just, go down the tubes.
Right.
And so, I would say that's where really the hard work begins, is navigating through that process. But in essence, that's an overview of kind of how everything works. And so everybody, I work virtually. Everybody on my team works virtually. We don't, we have overseas and the VA overseas VAs, and then we have the acquisition. But everybody works, virtually. We all, so that's how everything is run.
Yep.
And I don't personally talk with buyers and sellers. The best analogy I can give is that. The transition, I've been able to transition from being the pilot to being more the traffic controller, if we could use the analogy of an airport.
Yeah.
So that's really my role as a traffic controller, more of an overseer of things and a facilitator. And I'd rather get a nibble of a bunch of deals and do less work than to get more of the same deals but have to put in more work.
Right.
I'd rather
create something that can be scaled up,
Exactly. And so, the same thing that I just described to you, we also do that for clients. So we have clients that come to us and say, hey, Chris, I want to do direct mail, but, I need help in getting all this set up and doing the direct mail and getting the VAs on board and everything else. And so we then have figured out that, hey, you know what, we can do that for other people and partner up with them on deals and help them and facilitate it. And so that's kind of like our business model. So we do our own deals, and at the same time, we help facilitate other deals for other people, which we in then turn have a profit participation within those deals.
That's great. Well, we packed a lot of information into one show there. So if folks want to learn more, because I'm sure some folks' heads are spinning right now, which website should they go to learn more about this kind of process and potentially the opportunity to work with you? And
the best place to go to visit is our website. Our main website is Flip Anywhere. So the letter word as in flip, flip houses, and anywhere as in anywhere in the country. So flipanywhere.com. And you can go there. We have some free materials for people, and they can get more information about me and some of the other products and services that we offer.
Awesome. Well, hey, Chris, thanks so much for your time today. That's a lot of information. And after folks absorb it, maybe they'll come learn a little bit more about what you've got going on.
No problem. I appreciate it. Hope everybody got some great information and actionable steps from it.
Absolutely. Hey, thanks, Chris. We'll see you around, okay?
Okay.
Alrighty. Are you a member of FlipNerd.com, the most robust real estate investing platform in existence, where you can find off-market wholesale deals and great vendors literally in your market? You can get access to advice from experts and learn about local clubs and events right in your backyard. If not, please visit FlipNerd.com and register for a free account. You can register in less than a minute. It's pretty much the coolest site that's ever existed in the real estate investing industry, so get on over to FlipNerd.com.